Hi everyone. Good day to all of you. And I'm sure wherever you are joining us from all part of the world, you're all fine and safe. So let me kickstart with a couple of research things which I have done. I've gathered a couple of research pointers. One is that 72% of customers now prefer mobile-based first banking, and digital transactions are growing at over 21% year on year. The institutions that lead tomorrow will be the ones building for that reality today, and not the ones still debating whether what to do or how to do it. So it's my pleasure to welcome you to today's session, which is Digital First Banking, Preparing for Tomorrow's Challenges Today. This is a conversation I've been genuinely been looking forward to. So let me introduce myself as my name is Nitin Naveen. I'm VP Innovation Strategy at AI CoreSpot. I have a couple of decades experience across enterprise technology and different consulting firms. I've watched shift banking from a channel strategy into an intelligence strategy, and few sectors are moving faster than the one represented on this call today. Before we proceed, my thanks to my colleagues Arvind and Naveen who have been worked closely behind the scenes to bring today's sessions together. For those joining us for the first time, allow me a brief introduction to AI CoreSpot as a company. We were founded 5 years ago with a clear mission to build a professional community where the sharpest minds in technology could convene around AI, Gen AI, machine learning, robotics, and the IoT of things. That mission has since grown into a global knowledge hub trusted by enterprise and practitioners alike. Each month, we bring our community fresh perspectives from senior industry leaders, subject matter experts, voices who are not merely discussing the innovation but actively building upon it. Our content spans webinars, blogs, videos, podcasts, and our monthly newsletters, ensuring you are never far from what matters most in the technology world. Our ambition is great to become the world's leading AI-driven professional community. Sessions like this, with the caliber of leadership on today's panel, reinforce that we are firmly on that path. Today's discussion moves well beyond digital access. We'll examine what it truly means to be digital first in an era of agentic AI systems, real-time payments rails, hyper-personalization, and will not shy away from the harder questions as well, like the risk generative AI introduces into customer-facing banking, third-party model dependency, the future of voice AI, where competitive advantage comes from once every institution has access to same technology, and how bank build the governance and workforce capabilities this next chapter demands. To help us navigate these questions, allow me to introduce today's panel. So our first speaker is Hari Kishan, who is Director of Cloud Engineering at Manulife. Our second esteemed speaker is Chris Lowe, who is VP of Digital Experience Engineering at Ford Credit. And guiding today's conversation, we have a senior executive with deep experience translating technology strategy into the business outcomes. His name is Natarajan Kumar Velu, his Chief Business Officer, Banking, Finance, and Insurance at Infovision. Before we begin, a brief note. The perspectives shared by all our panelists today are personal and professional in nature and do not necessarily represent the official positions of the organizations they represent. With that, I don't believe there's any reason to wait further. This is precisely the conversation our industry needs right now. So, Natarajan, over to you to lead us through this discussion. Over to you.
Thank you, Nitin. And good morning, everyone. Thank you for joining this session. And thank you for the introduction and background, Nitin. So look forward to a very interesting session today. If you look at just the past 5 years, this explosive growth in technology landscape, right? It has shifted dramatically and it has profoundly changed the user experience and more so user behavior by bringing in new products, services, and capabilities across industries. Though we are going to focus only on banking and financial services, insurance segment today. So I look at three segments. If you look at the hardware front, we now have faster and smarter semiconductor chips, enabling way faster smartphones that we had, laptops, quantum computers, assistants like Alexa. You have wearables like smartwatch, smart eyeglass, self-driving cars, robo taxis, even full humanoid robots from a overall hardware standpoint. And then if you look at the software segment, we have new technologies like IoT, blockchain, you have cryptocurrencies, you have machine language, and now generative AI frontier models front and center of almost everything and anything these days. And then if you look at consumer engagement standpoint, now we have fintechs, neobanks offering all the core banking and insurance services on your mobile phone. You don't need a brick and mortar branch, so to speak. Then you have robo advisors for your wealth management, your retirement planning, all of that. You have stable coins, you have digital currency for payments for goods and services, and even your crypto assets can be used as collateral if you're getting a loan. Then you have buy now, pay later lending model. And we're talking about tokenization of assets, stocks, bonds, everything um, that are getting traded. Now, each of these technology advancements, they get adopted and absorbed by different industries in different fashion. But however, banking, financial services, and insurance is heavily regulated, sometimes at the federal level and also at the state level. And banking is usually highly cautious when it comes to embracing new technology. Usually, in a way, they are a bit laggard compared to other industries for the right reasons because of the regulatory compliance and the risks that they have to manage. So I remember, for example, when we were moving from paper-based checks to mobile deposits, people were worried about check fraud. How do I just scan a check and then what do I do with the check, etc. And now, we have evolved into peer-to-peer payments. We can send payments just with the email address or a phone number or QR code. We scan a QR code and you can pay. And then it became even better, right? So for example, now we have embedded finance. So you want to order a cab ride, so you go to Uber, Lyft. You just focus on the service, getting a ride. And you don't even think about payments. It happens seamlessly and automatically behind the scenes. The same thing, you're ordering food with DoorDash. You don't worry about payments, you worry about the quality of service and the food. And now the expectation is AI agents are going to do all of those transactions, including payments, right? So we moved from credit card to paying with mobile phone or smartwatch, and now to embedded payments. So while all of these things are good, of course, there are challenges with each of the technology, either from a technology itself, from a data security, privacy, risk and compliance, or people using it the right way. So how do we provide these hyper personalized service, if you will, from a bank and financial services and insurance standpoint, while they also cover, make sure privacy is paramount, so there's no breach for privacy or data security, and compliant with the different state and federal regulations. So we have two industry leaders, like Nathan introduced earlier, Chris and Harry, from different backgrounds, senior executives, to talk about how can we manage those challenges today so we can provide that digital first banking experience to the end consumers. So it's a critical topic at the right time for us right now. So we have pretty much a good set of topics to cover. So we'll start with the first question to Hari. So Hari, you've been in the block for a number of decades now. So when we say digital first banking, what do you think personally? What does it mean beyond offering, say, mobile applications, online transactions, digital self-service, or even UI-less self-service? Because pretty much you can ask anything over voice and you don't need a screen these days, right? So, what does it mean to you when we say digital first banking?
Uh, Thank you, Natarajan. Thanks you for putting me on the spot. So, yeah, happy to take the first question. So, the question, maybe if I may rephrase, it could be phrased as digital first banking versus digital only banking, right? Because these days, every system right now is digital. Okay, every transaction you could do is digital. But what truly digital first means is uh, having the end-to-end journey consolidated and integrated. For example, let's just take a real-time example, right? So let's say a customer updates the address in his mobile application in his bank. and maybe he receives that a green check mark saying that he's updated, and a week later he replaces his credit card maybe, and then it goes to the old address, or and his mortgage is showing a different address. It'll be like inconsistent, but in this case, every platform is digital. You can go and update every platform, but then truly digital first means every system works as per the customer's journey. That's what a truly digital first mean in its true sense. It's not about adding more screens, or it's not about adding connecting the data decisions, but it's about customer being the front of it and tracking the entire customer journey. That's where the true digital first banking lies in, and there are multiple ways to solve a problem. For example, if a customer wants to update an address, he can call and talk to the voice bot, talk to the human, open an application, go to the web browser, multiple things, right? So everything should be coordinated in a well matured framework that is governance implemented. So that's what our true digital first banking means, in my sense.
No, so that's a good way to put it. Rather than say digital first, I think the industry is moving towards digital only, not just for banking, but for anything that the consumers use. So that's a interesting point of view to say digital only banking. Now, we talked about generative AI in the beginning. So that's front and center of everything across all the industries. Now, you talked about some of the channels where if you want to do an address update, um, that's fairly simple use case. So a lot of clients that we are also talking to, so they want to almost take the low hanging fruits and then leverage AI to automate and drive better user experience rather than somebody calling a call center, waiting for 5 minutes and then doing a simple change. Now, from your standpoint, for those interactions, so what do you think are the biggest risk for introducing, say, a Gen AI based solution into customer facing interactions, like you talked about address change, particularly because now consumers are going to interact with a AI based chatbot?
Yes.
What are your points of view on hallucination and whether it is giving the right response? How do you validate and make sure that it is also compliant, so there are no biases in terms of race or ethnicity when the chatbot interacts with consumers, looking at their username and things like that? So what are the biggest risks of introducing, say, a Gen AI based solution for those interactions?
Yeah, that's an interesting question, right? So, when you introduce voice AI to the customer experience, you'll have to understand that you're communicating with the LLMs, right? Whether they are customized or SLMs or MLMs or LLMs, whatever it may be. You'll have to understand that they are bound to answer you. Is that going to be a 100% accurate answer? You'll have to understand that there is no answer that is 100% accurate, right? So if you're standing still, is your velocity zero? It's zero with respect to you, but it is not zero with respect to someone outside the planet Earth, right? So it's always comparative, always relative, and you'll have to understand that voice AI always answers. That's a double-edged sword. Okay, if you're a human, you have a leverage to define scope. No, sir, I cannot answer that question. Let me transfer this call to someone else. That is not expected as a default nature of voice AI, right? So that's why I mean, I've been working on customer experience industry, modernizing the contact centers and enabling the governance across the voice AI from the past few years. So with that experience, what I realized is we need to use voice AI for specific interactions, the interactions that handle speed, evidence collection, or maybe something that is reversible, that can be, right? So in such use cases, we could absolutely use voice AI. One interesting aspect, we have implemented the production level at multiple platforms as we speak today, is about identification. Your voice has three different types of signals. Okay, so one is the regular emotional speech that you're delivering that contains the information, and the other is there's something called as biomarkers. So the biomarkers will give the details about your stress levels, emotions, the prosody, and SSML, we call it as speech synthesis markup language. And the third one is identification. Every human has unique fingerprints to identify themselves. In the same way, they have unique voice biomarkers through which the voice bots can automatically identify, right? So that solves one of the irritating aspects of customer experience. Because let's say you have an issue, you're calling customer care, it's not getting solved. Maybe you have three issues to get it solved, let's say, right? So you call the customer care, you get authenticated, you spend about 30 to 40 seconds to provide your information, and then your query gets partially resolved, and then you need to transfer the call to another agent, and that agent also starts doing the same authentication. It's not a great customer experience. But with this voice biometrics, again, it goes with the consent of the customer. Uh, it's You don't have to pass on your PII data at all. The moment you start speaking, it'll recognize your voice biometrics, voice fingerprints, sorry, voice prints, and then it'll make it automatically authenticated. So such components that are absolutely distinguishable, where the chances of hallucination is very minimal, definitely could be leveraged with voice AI. And if you ask me, I always suggest to label the use case. We do the same for data governance too: red, amber, green. If your use case is green, absolutely use voice AI. If it is a read only, if it is something that is super accurate, it's already proven, it's already been in place, the voice AI already saw the scenario, it's green, go for it. Right. So depending on the labeling and categorization, you'll have to somehow interact and balance out between voice AI and human in the loop.
Got it. Got it. So, Chris, what are your views on AI hallucinations, explainability, and the originality of the content?
Yeah, first, thanks again for having me here. And I think I'll piggyback off of somewhat Hadi was mentioning. A lot of the quality and the impacts of AI has certainly accelerated over the past couple of years. But we do see things like the concerns around hallucinations are, I think, materially lower today than what we would have saw a year ago or even 2 years ago. But we see the risk of fraud and compromise has really gone up instead. So no matter where we are in the kind of the AI spectrum and generative AI in the banking world, I really think about three kind of core risks that we still maintain that are material to what we do in general. The first is the confidence piece, right? So Hadi mentioned the example of, if I can't handle this call, I'll go to somebody else. Well, in a use case of a junior employee, if they come across something they haven't solved before, they would go to a senior employee, right? They would escalate or they would handle it some way. AI will confidently give you the wrong answer. And it creates this false sense of security for automation taking the place of due diligence and logic and thought and understanding, where we start to trust the systems more. And maybe 9 times out of 10, they're correct, but that 10th time may be pretty dramatic. Right. So that's the second material risk, is what I would call asymmetric risk and blast radius. So thinking about error tolerance, and it's asymmetric in terms of, if you use generative AI to update your website and you get the branch hours wrong or you get an address wrong, that's embarrassing, but that's survivable. It's not a fatal flaw. But if you use the wrong field because you're doing some data movement, and your AI picks the wrong database or the wrong table or joins in the wrong way, that same model can have a very detrimental effect to the operations of the business, right? It's not a tech problem anymore, it's an operations problem, which makes it a much bigger issue. And then lastly, I think the third material risk is really around the insights and explainability. So compliance risk doesn't come from what model you're using, right? We can justify the use of any model. It's really, what data did you use and why did you make that decision, right? What outcome did you get and was it appropriate for you to get there? And so we spent a lot of time, over the past 10 years figuring about how to manage privacy risk and who has access to what and what decision gets to be made. But now we're in a world where the data in motion is much more sensitive. Right? Prompts and context windows can live on for a long time that nobody has insight into. It's a new kind of data store, if you will, that doesn't have a great governance answer in the industry yet. We don't have a solid way of managing that. So again, piggybacking a little bit off of what Hardy was mentioning at the very end of his response, the way that we tend to think about resolving this is kind of the old adage of don't throw the baby out with the bathwater, right? It's what we have in many cases still works, right? Very deterministic rules-based systems for experiences or processes that have zero tolerance for variability are still appropriate. They're still right for that. But things that actually make the experience better and by being AI enhanced, that's the places that we should really lean in on managing that risk because the reward there is much higher than the risk, right? So that human in the loop, or more modernly, what we would call human in the lead, still has a place in our really deep core operations that I don't see going away in a long time.
So no, that's a good segue into the next question that I wanted to ask you, Chris. You talked about the tolerance level. Now, we have a lot of closed loop frontier models, and then we also have open models, right? So there's a big thing that's going on where people are supporting open source model because of the issue that happened with Hugging Face, etc. So a lot of people are still using AI models that is built on a frontier model. So what do you think about the third party risk framework? And these models are evolving every day. Every day there is a new version. There's a new thing for cybersecurity, new thing for certain other things, and there are a lot of other niche companies who are creating use case specific agents or applications leveraging AI for that specific use case. So you are not technically controlling a lot of those things that AI engine is doing underneath. How do you validate the information or the source is correct? How do you manage the third party risk?
Yeah, it's a huge challenge for and oftentimes for companies, vendor management groups at large companies may not be that big, right? They serve an important purpose, but maybe 10, 20 people. It's not a 500-person organization, right? And so the way we would have traditionally managed that is managing the depth or the breadth of the situation, right? I manage the depth by limiting the number of vendors we do business with. Right, especially the larger the company you go, you tend to have key suppliers, right? And you have these tiers of third-party models. And then the depth, like I said, maybe we buy a lot from Microsoft or we buy a lot from HP. And so in this new world, it really breaks this model of what we would traditionally would have thought in a couple different ways. I think first is, as exactly as you mentioned, is you don't control the underlying product. And what we're seeing in the AI world is the expectation that you move extremely quickly, right? Traditional vendor management would have assumed versioned kind of managed feature delivery, right? We see this even still today a little bit with Salesforce and Microsoft. Here's our winter release. Here's our 2026 second half release, right? Very thoughtful. I can choose when I get to take it, and we're going to work through it. We're going to debug it internally, then we'll release it. We're on the other end of that spectrum is AI IDEs like Cursor. They might have 12 releases this week, right? And so the expectation of just release and release and release and release is what will fundamentally break any sort of third-party risk management or framework, because the speed is the thing that one of the things that they anchored to was how often do I need to look at this thing? There's an example that I was reminded of from last year when OpenAI released ChatGPT-5, or sorry, they released the GPT-5 model. They actually made a decision overnight. Once they released the model, they sunset their GPT-4o model overnight. And in less than a week, they had to restore access to that model because the customer backlash of them saying, I can't adopt this model that you just released. I haven't validated it. I haven't confirmed it. We haven't regressioned it. Like everything changed. I can't do that. And so, we're reaching this upper bounds of how fast companies can go. And we're getting better at it for sure, but really thinking about pushing the limits of a little bit of like the tail that wags the dog, right? This one change may cause a cascade of changes that have to happen very quickly. The other thing I'll touch on just briefly is in those models, I'll mention closed source models first, is you don't get to audit the weights, right? You don't get to see what's happening. And I think some of that is also true on the open weight models, where even though you get to audit it, the expertise and knowledge required to effectively have a good opinion on whether that model works and is weighted appropriately is still exceedingly high today. So the risk moves from traditionally would have been vendors where you called up and got their SOC 2 report, right, to justify to me so I can tell the auditors what you do. Now they're using all the same models you are, and so now we share the risk because we both have to justify why we're doing what we're doing, which leads to the switching cost is now much higher, not because switching between models is expensive, but the infrastructure you put around it, right? The prompts and the infrastructure itself, the eval loops, every way that you talk to a model changes, right? Even there's a lot of feedback moving from like Opus to Fable with Anthropic. Fable does not want to be gate-kept on how you prompt it. It wants an idea and it runs with it. So we saw these transitions really start to break down. And so that's a business value impact of third-party risk management, maybe not being able to keep up, and it has to adapt with the times.
No, so that's good. And because you touched and you mentioned Cursor, now if tools like GitHub Copilot, Cursor, Claude Code, all of these things are enabling AI code generation, the integration, generating test cases, and even pushing it to production. If all of that is made easy, now what do you think is the new bottleneck? You also talked about the third-party risk framework, what you can't control, and you can't keep implementing new solutions from different providers. So the coding itself is easy, and you can connect all of these things to a MCP server. The agents can interact. But so from your standpoint, what do you think is the new bottleneck?
Yeah, so if I'll first stay within engineering just briefly. So we've spent the past 20 years focused on finding this equilibrium. Every company in the world has had to go through this equilibrium of how do we manage work coming from our business or product management into and match the throughput of engineering, right? Sometimes that meant hiring more people. Sometimes that meant phase gating, or now we have backlogs and we're releasing batches of work. So we had to find pre-AI this balance of work demands, the throughput, and how do we add value along the way. And even pre-AI, when we looked at things like lead time or cycle time analytics, we found that the coding piece itself was not truly the bottleneck. We spent a ton of time looking at refining work, discussing architecture, provisioning infrastructure, right? Getting servers on deploy. I remember when I first started kind of in the corporate financial world, I had this new project and it was an 8-week lead time to get a new server installed in the data center, right? And so these thoughts that went into how do we release things really ate up a lot of time. And in an engineering context, in today's world, the constraint is now about comprehension, not generation, right? That's the easy part now is I can generate 100,000 lines of code today, right? It's super easy to do that. But to comprehend that, I think we all know businesses that carry decades of inherent business rules. Many of our companies have the 50-year-old mainframe system that nobody just kind of touches and it just runs to keep it going because the whole company runs on it. Right. So understanding what exists is now the challenge. Now that we don't have to generate, it's understanding what we're doing that becomes much more critical. Right. We see engineers shifting from authors to editors. Right. They're curating more than they are actually doing the hard coding these days. And so what I see in the future is really, maybe it's not so much about actually rigid quality as it's been in the financial world for so long, and maybe more actually about production confidence and how often can we actually implement continuous improvement loops. So if the speed of change can be faster than the time it takes for me to get accuracy and certainty and reliance on this code, that might win out in the end because I can fix it faster than I can find it. Right. And so that shift is really where the bottlenecks will start to move for engineering. Ultimately, if something takes 9 months to go from idea to production in a made-up example, if the part of coding it went from let's say 2 weeks to a day, I went from 9 months to 8 months and 3 weeks, right? So really, the value comes from the supporting functions to the left and to the right of engineering becoming much more valuable, right? You have to transform the delivery system itself. So we've thought about how to do it with engineering, right? That's where coding comes in. We see a lot. We see things like the GSD framework that helps us think through architectural patterns and really thinking through the full SDLC. Well, now we have to go and think about how do I create agents for product management to do continuous competitive research? How do I create an agent for legal to review boilerplate language that we mandate in every contract that we get? And let me go from a 3-week legal analysis down to, can they look at the hard parts in 6 hours, right? That kind of transformation across every step of the value chain. In my head, what I see is we have the software development lifecycle, which we've always had. And we have generally now in the industry what we call the product development lifecycle, right? This is the customer research and your Figma designs and kind of doing all the things of what problem are we trying to solve, what product manager is trying to do. Those are really converging, and that's where we have to bring the value to all the other roles of the company. The thing that really comes to mind for this is the common phrase, a rising tide floats all boats. The companies that can unlock that and bring AI value doesn't have to replace jobs, and which I think we'll talk about in a bit. But what it can certainly do is augment the jobs that are happening now and help everyone go faster. That's what moves the needle in these cases.
Yeah, no, I like the speed of change that you talked about. So I want to stay with you for one more question, and then we'll switch to Hari. Because you talked about the speed of change, of course, things have moved from the earlier days of paper, fax to call center, voice to chat, and now we have text, conversations as well. If you don't even want to wait on the phone, they can send you a link, and then you can exchange messages. And then you can do, and I know it's not so prevalent here, but outside the US, WhatsApp is actually used for banking. You can actually say balance in the WhatsApp account that you have with your bank, and they can actually send you the balance and then last 5 transactions, etc. So now, because you are on the lending side, Chris, even auto buying has changed dramatically. Earlier, it used to be you have to go to the showroom and you can buy cars, trucks, whatever you want. And the model itself has changed, where like Tesla changed the model where they don't have a dealership per se. They can sell the car directly. And then Amazon went and tied up with Hyundai, where in Amazon you can actually buy cars. And it's not about only a banks or credit union can actually do a car loan. So it's not separate transactions that you want to buy something. It's almost, brought in as an offering these days, right? So that's why people say, I want the scale of Amazon, I want the user friendliness of Apple, but at the same time, I want it at Walmart price. Now, from a channel strategy standpoint, you talked about the speed of change. From a consumer behavior, what do you think companies, banks, financial services institutions, or even insurance company should think about the channel strategy?
Yeah, so it's a great point. I think there's definitely a lot of innovation that's happening, and we're very early in this curve of how is consumer behavior going to shift, right? And to your point, things like Amazon Auto are very interesting to us. Yeah, I believe it's Amazon Auto that even Ford has partnered with Hyundai has partnered with them quite deep. And so we're still in this kind of innovator and early adopter phase. We're really trying to still figure out as a consumer product, right? What does it mean to get into this? But I think from a channel strategy, historically, we've always assumed you own the surface of it, right? And we made this distinction of earned media or owned media, right? Is where are you at in the funnel? And now what we're seeing is, when an agent or an assistant, kind of intermediates for us, it's the middleman, if you will, for this process. Now companies just become an API, right? They become data behind the scenes for somebody else's experience. When I was doing the research for this webinar, one of the things that really stuck out to me was there's certain research estimates that are out there that say up to 60% of searches, even today, result in what they call zero-click results, because the the agent has the answer. I don't have to explore any further. So you can really think about, in a kind of a literal sense, like perhaps 60% of my traffic no longer knows who I am as a brand and a messaging and a context, right? It shifts to something else. So the value proposition here is now about thinking about how do I get to be more machine readable? How do I become agent transactable? Right? We see last year we actually saw some really nice innovation from Visa and Mastercard, both launching MCP servers and integrating with OpenAI and Stripe, so that we can actually launch purchasing. Right? I think Etsy now is one of the companies that has a you can enable the connector and you can buy through shopping because it's what you want to look for. And so we see a lot of scenarios where customers want aggregation when looking for advice and shopping, right? In the banking context, it might be who has the best savings rate right now, or as you mentioned, it might be should I buy this Mustang GT or this F-150 Raptor, and can I afford it? Right? Those questions, they don't want to go out and find. I don't want to go to 7 different manufacturers' websites. I don't want to go to 5 different banking websites. Bring it to me, right? And this is the fundamental value proposition change that these agents or assistants bring to customers. The counterweight to this, I would say, is high commitment or high anxiety moments, closing on that loan, dealing with fraud, or I just lost my job and I can't afford this anymore. Those still push customers deep into the own channels, right? Maybe like in voice, like Hadi's mentioning, I'm going to call somebody because I need the confidence of who I'm going to talk to. That reassurance is something that is not yet reproducible, at least in the U.S. market. To your point, we're not as comfortable with interacting just digitally for everything as there are in many other parts of the world. So that dealing with who I know who I'm dealing with is still an important piece. And the power now for companies tends to be more in designing for that handoff. How do I go from an agent into my experience and still maintain the context? Can I know what you were searching for? Can I know what responses I gave you? These signals of a company saying, I've got you, right, if you will, in quotes, like, we'll take care of you regardless of how you interact with us. That is really what I think is going to drive brand power going forward, because we don't control the strategy as much, but we can control more about how we show up in them.
No, so that's a again interesting segue into the next question that I wanted to ask Harry, because he talked about voice prints. It's like fingerprint, and he has done a lot of work that he mentioned leveraging voice channel. And recently, there's also in the news that OpenAI is going to release a device, so UI-less, so you can talk to it and get answers based on AI. So the next question for you, Hari, is how does voice AI fit into, say, a digital banking strategy? Because I've also seen where when Alexa was first introduced, there was skills that you can add from banking standpoint. But then they also ran into some privacy concerns where you have Alexa or Google Home or any of the voice assistant in your home, and you say, hey, give me my bank balance or transfer $100 from my checking to savings account. While it's in your home, it's personal, but still it can always listen. And if there are people around, sometimes sensitive information can be out. So from your standpoint, where do you think voice AI will fit in a digital first, banking strategy? And if there is a specific customer journey that it can fundamentally redesign to, Chris's point, you need that authentic service. And we also need to make sure that it's not a deep fake. We have also seen a case in South Asia where there was a deep fake video audio that actually prompted a CFO to transfer millions of dollars, right? Then they realized it's deep fake. So if you can touch on your inputs on voice AI and use case of a customer journey.
Oh yeah, absolutely. First of all, you touched a lot of interesting segments in one single question. So I'll try to shorten it, consolidate, and keep it in a high level, given the time in mind. First of all, voice AI is super advantageous. It's a superpower, but at the same time, it's a double-edged sword, right? So it can be is super dangerous too. All you need is just 15-second recording of a person to clone the voice. You could even almost is a keyword because it's not 100%, but you can almost replicate the voice trends. So there are biomarkers that cannot be replicated, which is actually a gift for us till today. No one was able to do that. But then right now the research is, I mean, way ahead of what a normal person can think of, right? So uh, let's say there is a concept called as digital resurrection. The dead who are already dead long ago can be resurrected using voice AI. And it's going on. What I mean is, a person who is no longer with us will suddenly call and talk exactly like that person, right? So that's a AI voice. And uh, unfortunately or fortunately, if let's say I come in public, say that I am impersonating a dead person, and I announce it publicly, nobody can put me accountable. Nobody can do anything to me. It's not illegal because the person who is no longer with us never consented whether his voice is allowed to be replicated or not, right? That's a legal glitch that is going on right now, and a lot of governance policies across the globe are dealing on balancing out and releasing away. But then, yeah, to answer your question, yes, it is. There are segments where voice AI can be super helpful. For example, take a situation: a customer is actually on a phone with a child. It's 2 a.m. in an airport, and he's trying to buy a ticket, let's say, or pay extra money for the baggage. Suddenly, the credit card declined. Uh, Options he has is, while he is in the queue or while she is in the queue, she can open the app, try to figure out why it happened. It takes a lot of time, terrible customer experience. But at that same time, if she just gives a call to the customer care, and the voice AI recognizes her voice and then uh, make sure she is the right person and approves the transaction. That's the fastest way of response, fastest mode of response. So voice AI has certain segments where it can be super helpful. And in fact, the voice bots are of two types. There are two generations. The first generation is called as ASR. It's speech to text and text to speech. It's a kind of a pipeline. It kind of adds a bit of latency comparatively, but then there's an upgrade to this voice AI. It's called as yes to yes, speech to speech, where we'll be having a black box. We will convert the entire voice into audio tokens and then decrypt it and then encrypt back to the audio tokens back to the speech. So those will actually preserve the voice biomarkers too. It's more secure way, but it also is giving 195 milliseconds response time, which is faster than a human can respond. Okay, so it's getting better and better than a human in terms of experience, and you really have to take a call, right? So to which segments slash which group of activities in your use case, and in to what extent, to which touch point of the customer journey are you trying to allow the voice AI? Because you'll have to remember one thing: you could achieve a million things as a company, but all we need is one failure to to do the anti-marketing. There are a lot of situations. For example, chatbot sold a car for $1. Okay, so there are use cases. So it's like nobody cares about how big of a brand that is. Nobody cares about how strong the car is. All they care about is that one glitch that happens in the system, and that's why governance is super cautious in bringing anything as a new thing. Let's say if I want to procure something that is related to agentic AI today, that keyword agentic AI in a regulated industry stops everything, halts everything. So we'll have to make sure the governance is catching up with the upgrades that are going on with the AI space, and we'll have to really configure our customer journey activities and the touch points to which will fully apply voice AI, partially apply voice AI, do not touch it with the voice AI. Those are the categories that we'll have to take a decision and move on.
So that's a, wonderful example about the car being sold for $1, and even some of the prompts that people have creatively injected to even download source code, right? So yes, now so that's an interesting change to talk about the third-party governance and the oversight. I know we touched on a little bit earlier, but what are the guardrails? You talked about voice AI, or in general AI per se, what do you think are the guardrails that we can put from a governance standpoint? Because there's one question that came in the chat about governance and trust in the overall task an AI agent is assigned to do. So, Hari or
Absolutely.
Chris, if you want to answer on the governance.
I'll add 2 points and then I'll pass it over to Chris. So,
Okay.
yeah, the first point about governance is again, a lot of these governance follow some patterns. Okay, so if you check the generations of technology, we've before the cloud era, we saw the big data era, where the data governance was very new and people did not know how to manage the huge amount of data. They placed the governance, and a lot of organizations had to catch up with a huge amount of technological velocity, right? So they don't know about dealing that huge amount of data, and they're trying to fixing to the situation of labeling the data, categorizing the data. This data should be treated with absolute governance principles of that nature. So I have segregated the same things for agentic AI, and I've consolidated them in my recent book. It's called as The Thinking Voice. Definitely worth a read. It's available in Amazon. But when it comes to governance, label it. Governance should know what is absolutely sensitive. So if you take any activity that agent is doing today, I would personally categorize into three different labels. One that is read only, informative. Again, there is no right answer. For example, if a customer calls a bot and says, "Hey, I transferred $5,000 and to a wrong customer, can I bounce it back?" Answer is yes, absolutely. You can bounce it back, and the voice bot says the same answer, but it is right and it is wrong. It is right if he's doing an international transfer because it has for 30 minutes, next 30 minutes, you can absolutely take it back. But if it is a Zelle where you already added the customer as a trusted customer, right? Then you absolutely cannot do that reversal of the transaction. So it depends entirely on the context, right? So you'll have to categorize if it is read only, if it is low confidence, if it is already proven decision, where your internal cache or your internal governance layer already went through the scenario with absolute positive feedback, then yes, go ahead, give the control to the agent. But if it involves any transactions, monetary decisions, things that could put the prestige of the company on the line, definitely pass it on to the human, right? So these segregations, if it is completely a PII information, do not ever give the access to the agent at all. For example, take authentication use case. A customer is giving some last 4-digit SSN to authenticate. Do not send it to that LLM. LLM only has to generate the SQL query or any other Python query or whatever the communicative query that communicates with the database. It can only have the access for the label is authenticated, yes or no, right? So that is absolute segregation you need to put in place. Starting from there, you definitely have to governance have to rapidly grow alongside agentic AI's versions, improvements, upgrades.
Chris, your views. I know we are running short on time. I have two more questions to ask.
Sure. Yeah, I'll just quickly add. I think Patty covered a great piece of it. The only thing I would add is extending his the grow and scale of the governance is more about governance as code, right? We think a lot about how do we actually codify why and how we make decisions, right? The use of markdown files has been an absolute game changer in terms of establishing guardrails, making certain decisions, really focusing on what is and is not allowed for the AI to handle, and including these exception cases to Hadi's point of, hey, if you detect this pattern that you were passed in, maybe some sensitive data, abort and phone a friend, tell somebody about this. So really leaning into those safety mechanisms through markdown as codifying how we operate is pretty central to that.
Okay. So and now we talked a lot about AI, and some of the institutions are claiming productivity benefits or AI gains, either in the top line revenue increase or in the cost decrease, which also results in a lot of layoffs, etc. Now, what is your view on that quantification? How do we capture the quantification of AI benefits, either in terms of cost reduction or productivity benefits, or even rolling out new product features very quickly? Chris?
Yeah, for sure. So yeah, I think first and foremost, I would I would never underestimate the ability for companies and corporations to be really good at keeping people busy. So there's this underlying, right. We're really good at corporate work that happens, but yeah, I think the honest answer is first and foremost the product backlog. I think captures this productivity. Software, the demand for software and what we do in financial institutions, especially, is pretty infinite, right? There's an endless supply of enhancements to our underwriting engine or the core frameworks or our experiences. So first and foremost, it's very easy to just kind of lose sight of just do more work endlessly. There's a term called Jevons paradox, and I'm hoping I'm pronouncing that correctly. But it states that when technology makes resources more efficient, overall consumption of that resource goes up. And so we see kind of the parallel to this is when ATMs came out and bank tellers, right? The bank industry was really concerned about all the tellers were going to get laid off. Well, really what we found is that employment went up after the release of the ATM, because it meant banks could be cheaper, right? I needed less staff, but I could have more branches. And so now I had more staff as a net, right? And so we definitely see the shift of value capture from what it used to be of just building and delivering things to saying, now what more can I do? Right. And so I think companies really have to lean into that. Is it going to be fewer people? Is it going to be more product? Is it going to be innovation? Is it going to be faster loops and changes? Most companies, I think, struggle to choose that, and they end up getting just mixed results, right? Or stasis. We see a lot of reports that people went all in on AI and got no results. And part of that is not committing to what am I going to do with the benefits that I get from this, right? And making the necessary structural changes, like I mentioned earlier, so that everybody benefited. Some companies certainly opt to go with the fewer people route, right? It looks better on the balance sheet and it's a fast, kind of quick remediation, but it kind of locks in where you're at today and it really caps innovation, at least in my opinion. So, product development operations, we should generally think about measuring flow, right? Understanding how much output, how many things we're shipping to production, and that material increase means we can then choose, do we innovate? Do we operate as a smaller company because that matches our strategy? Or do we continue to innovate now that I have so many more people free to do something else?
No, so this is good. One last question, Nitin. I hope we have time for that. Okay. So, Chris, you mentioned earlier when we were talking about AI, you said that when something is not right or you don't feel right, you stop and you go ask somebody or ask a colleague. Now, my question is related to that. Now, with the AI doing most of the technology, development work, we talked about Copilot, doing all of the coding and all of that. Now, how do we groom the next generation of technology talent? Earlier, you had new people coming in, mentored by senior people in the team. Now, if AI and frontier models are doing all of the technology work, how do we train the next generation of engineers to know when something is not working? What do? They can't just wait for the AI model to fix itself. Probably it can, but what are your views on that?
Yeah, it's a huge change that's happening right now. I think we see internships and entry level jobs being impacted across the board. But I think what we're starting to see is the correction of, we kind of had this pendulum swing into correction territory in 2024, 2025, where mass layoffs because AI was just going to do it all for us. And we're starting to see companies kind of rescind that, right? They're hiring back workers or they're changing workers. And so for me, the junior engineer job, really most junior roles, the junior engineer specifically, it changes rather than disappears, right? The ability to just create code before, which was their value proposition, just add more coal to the fire, if you will, now is about curation and writing specifications and systems level thinking. So I think we're actually going to see an acceleration of things that used to be mid and senior level territory now have to be curated much earlier in the engineering lifecycle. Right? I think we're going to see college courses that are changing and thinking more about architecture rather than coding classes. Right? The whole value chain has to shift, quote unquote, shift left to what we love to have in engineering to provide more value. Today there's a strong incentive for companies to lean in on just hire senior engineers, right? Fire all the junior engineers. And fundamentally, what it comes back to for me is who's going to be the next VP of engineering? Who's going to be the next director of platform, right? 5 years from now, we probably have an answer. 10 years from now, we don't. If we cut all the junior roles, right? So it's less about the classic like code monkeys of just people that put stuff out, and more about who are we investing in, what's our talent strategy, because the company needs to run after this, after me, after the next person. What's 20 years from now look like? And if we stay in this correction territory, I think we're going to be pretty disappointed with the answers. So, juniors should lean into AI. They should drive outside value for what they do, and be flexible with where the work goes, because I think the work is still there. It's just shifting to different places.
No, so this is good. I know, Nathan, we have only 5 minutes left, but this is a very, very interesting and enlightening conversation because we touched on challenges across like talent management, productivity gains, channel strategy. We talked about voice AI concerns, third-party risk. I believe cybersecurity itself will be a separate 1 hour topic on its own. We couldn't cover that. So back to you, Nitin. If you have any other questions from the audience that we can take in the limited time that we have, otherwise we can do the closing remarks.
Thank you, Natarajan. And I'm sure you have moderated this panel with great precision. You gave structure to a wide-ranging conversation and ensured both our panelists had the space to bring their full expertise to the table. Thanks to Hari and Chris as well. Thank you both of you. What you shared went well beyond our frameworks and predictions. You brought hard-won operating experience from inside two very different financial institutions, and that is precisely what makes a session like this worth attending for anyone. Just to everyone who joined us today live, thank you for your time today. If there are anything you'd like to pass this along, there will be a recording for this webinar, which will be posted shortly on the AI Course Spot YouTube channel. And today's session was also broadcasted live on LinkedIn. So this session is one part of a much larger body of work. AI Core Spot continues to bring fresh perspectives across the sectors that matters most. Banking, financial services, and insurance obviously is one of them. Then we have in telecom, retail, consumer goods, supply chain, manufacturing, and the list goes on. We keep on curating different events across different industry verticals. A great deal more is ahead, and I would encourage you not to miss it. I'd encourage you to also stay connected with us through our website, our social channels, our newsletters, and stay ahead of upcoming sessions and the latest developments in technology. I would also like to take a moment to recognize the partners who make sessions like this possible. InfoVision, who is our knowledge and innovation partner, Digit7, who is our technology partner. So both have continuously invested in advancing the boundaries of technology in something what we are proud to be associated with as well. To our audience, your engagement, your presence is what gives our community its value. I'll encourage you all to continue sharing our content, bring your networks into these conversations so that everyone can learn and try to get the most out of these conversations. On behalf of the entire AI Course Spot team, thank you again, all of you for joining us, and have a productive rest of your day. We look forward to welcoming you back very soon with our another set of event. Thank you.
Thanks, Chris. Thanks, Eric. Thanks,
Thank you.
Nathan. Have a great
Thank
day.
you.